Hello traders, welcome back to the Forex Geek channel. In today's video, we are going to be talking about the Renko Breakout Strategy, a method that can help you filter out market noise and focus on a clear price action. If you have been struggling with false signals or getting caught up in minor price fluctuation, this trading strategy could be the exact thing you need to improve your trading performance. So by the end of this video, we are going to understand how to set up the Renko chart, identify key breakout points, and execute trades with precision. So stay with me until the end of this video so that you can know how to apply this strategy effectively in your own trading strategy and take your trading results to the next level. So we start by understanding what the Renko charts are. And these Renko charts are a unique and powerful tool in the technical analysis. They are designed to simplify price action and help traders focus on significant market moves. Unlike your traditional time-based charts, the Renko charts are built using price movement alone, filtering out minor fluctuation and presenting a clearer picture of market trends. The key feature of the Renko chart is the using of bricks, which are created when the price moves by a predetermined amount. For example, if you might set your Renko chart, like what we can see, this is my Renko chart on my screen. If we set our Renko chart, you might set your Renko chart to create a new brick for every 20 pips. It creates a new brick. So that's what we are talking about. Now these bricks are always placed at a 45-degree angle, with green bricks representing the upward movement. The green bricks signify upward movement or an uptrend, while the red bricks signifies showing down movement. The red bricks signifies down movement or bearish movement, as the case may be. One of the most advantages of the Renko chart is the ability to filter out the market noise. By focusing solely on price movement of a specific size, this chart eliminates small and insignificant price changes that can often distract traders from the overall trend. This clarity can be particularly useful when identifying breakout points and trend reversals. Another important aspect of the Renko chart is their flexibility in brick size. You can adjust the brick size to your suited different trading style and time frame. A large brick size will show you fewer and more significant price movements, while a smaller chart will show you a smaller brick will show you details, and it may include more noise. So if you want to edit your Renko chart, you come to this area and you edit it however you want to edit your Renko chart. By using your Renko chart, you can easily identify the resistance and the support areas. You can spot trend reversals and recognize potential breakout points. This clarity can lead to more confident trading decision making and potentially more profitable trades. In the next section, we are going to involve ourselves on how we can leverage this tool in our trading approach. First of all, let's see how we can set up our Renko breakout strategy. Setting up this strategy and executing our trades involve 5 key steps. Let's walk through each of the steps to ensure we can implement this strategy step by step, and we know how to implement this strategy with efficiently in our trading style. First of all, you choose your brick size. You select your appropriate brick size from your Renko chart And one of the common ways you can do this is by using the average true range. When you put your average true range indicator, the ATR help you to adjust the brick size dynamically based on the market volatility. Typically, a 14 period ATR is used, but you can adjust this based on your trading time frame. So to adjust this, you just need to put your ATR indicator. It helps you to adjust your chart. The second step is to identify your key level. Once your Renko chart is set up, identifying is as important as setting this up. You have to identify your key support and resistance level, because this level will serve as breakout zones. Now let's not forget your key support and resistance level are previous swing highs and low. These are areas of support and resistance, as we can see them on the chart. We have to look for this area where price repeatedly reversed or struggling to break a particular area. Areas where price reversed from or is struggling to break that area. Those are your support and resistance zones. The third step is to wait for confirmation and to enter. Once a breakout is confirmed, let's look for a very sweet breakout to understand this our trading strategy. Yes, this is a very good example of a breakout where price failed to break a zone, kept on retesting it. This can be our support area. This is our support line. As you can see, there are a lot of price action at this area. I think we should let's use a zone to make it easier. This should be our resistance zone. This should be our support zone. When it was broken, it became our resistance zone. So this is our support line. Let's not forget. Once the breakout is confirmed, when two consecutive break forms beyond the identified support or resistance zone, this is your signal for your entry. You enter a long trade when two bricks close above the resistance. If it is for a long trade, once it closes above the resistance, you enter your long trade. While if it is for a short trade, you will enter when two brick closes below our support. So if we are to enter this trade, in this case, after we see two brick close below, we would enter the trade at this area. So we'll be using this example, this bearish trading example for this lecture. Now we need to know how to set our stop loss and take profit, because stop loss is one of the most important feature while taking a trade to manage your account. You have to place your stop loss just below the last swing low in case of a long trade, and in case of a sell trade, you place it just above the swing high, or you can put it above the now turned resistance point. This previous support that turned to resistance after price broke through it, you just place your stop loss just above it. This help you to protect your position from false breakouts, and it also gives you room to allow your trade to breathe. In case price wants to come back to that area and play around, your stop loss will give your trade enough room. Secondly, we need to know where we put our take profits, and we need to set our initial take profit to at least 3 blocks in the direction of your trade. So after where you enter, you can set your take profit to 3 blocks after the trade goes in your direction. Or you can use a trailing stop loss to lock in profits, meaning when price go in your direction, you carry you carry your stop loss and put above your take profit, and as price keep on going, you keep on carrying the stop loss above, you carry it forward and forward to secure more trades. That's how you can trail your stop loss. This helps you to lock in profits, allowing you to gain further. Or we can just use a standard 1:2 risk to reward ratio method to take profit. This is how we do that. We can go for 1:2 or 1:3 as the case may be. Now let's see if we can get a buying opportunity. Let's see how we can take this trade using a buying opportunity to make things easier for us. We look for a buying opportunity on the chart. Let's not forget we have to wait for price to first break out from our area of our resistance area. You can see from this chart, as you can see from this chart, this area was making price tested this area. It was difficult for price to break through this resistance point. Even at this point, you can see price kept on reacting from this area. It broke out, broke back inside. You can see this area is a very strong resistance point. Eventually, when price broke out from this area, let's not forget we have to wait for price to break out and close. We wait for the two blocks to form above the resistance area, and we enter our trade. In case of stop loss, we put it just below the resistance point, or we put it below the swing low point, anyhow, to give your trade enough room to breathe. Then we can trail our profits, we can trail our stop loss to gain more profit, or we can target 1:2 or 1:3 as the case may be. The Renko Breakout Strategy offers a clear approach to identifying trade opportunities. By cutting through market noise, remember to choose appropriate brick sizes, wait for your confirmation, maintain strict management for your risks, practice and backtest this strategy to refine your skills. Alright traders, we have come to the end of this video. If you found this video helpful, do hit the like button and subscribe to the channel. Thank you for watching our video. Do not forget to turn on your notification bell for more trading insights. Until next time, happy trading.